On behalf of the Sustainability Reporting Standard Board of ICAI, I, Jyoti Singh, extend a warm welcome to all of you to the 22nd season of our webinar series, Demystifying Sustainability, Catalyzing Growth. Today's session is centered around a critical theme, ESG rating and BRSR reporting, aligning sustainability disclosure with investor expectations. We are honored to have with us our esteemed speaker, CA Harsha Ramnani ji, and our moderator for today, CA Manisha Keshavji Tedia ji, CA Virav Nitin Tedia ji. Let us now begin. I would like to invite CA Manisha ji to kindly take the session forward. You are on mute.
Hello. Now
Yes.
I'm a, yeah.
Yes.
Okay. Good afternoon, everyone. Thank you. First of all, I would like to thank you, ICI, for giving me this opportunity to to welcome the sessions. I would like to introduce Miss CA Harsha Ramani. CA Harsha Ramani is a fellow member of ICI. She scored rank first commerce graduate from Kanoria College of Commerce in Jaipur. She is also a registered valuer for security and financial assets with certification in forensic accounting, internal audit, Ind AS, BRSR, and public finance. With over 15 years of experience in statutory Indian as well as IFRS and BRSR, internal operation and performance audit across diverse industry. She also specialized in valuation, advisory, due diligence, ESG reporting, Ind AS, IFRS, conversion, and impact assessment. She was the first in the Rajasthan and among the top 10 in India to clear the social auditor exam. She has contributed to the World Bank Fund project, also authored ICI technical guides and article. And she is a regular faculty and trainer on to the ICI, ICSI, and ICMAI. Her professional exposure not only extend to span India, but also USA, EU, Middle East, Russia, Pakistan, and China. With this brief introduction, we welcome C. Harsha Ramani Madam to share her thoughts with us on the topic. Now, I hand over the session to Harsha Ma'am without any waste of time. Thank you.
Thank you so much, Manisha ma'am, and thank you so much, first of all, to board and ICI for giving me this opportunity. I hope I am clearly audible.
Yeah.
Yeah, okay. So, first of all, I would say the topic is very important for all of us because ESG or BRSR reporting, I think we all are now very much aware about because it's not a new thing for all of us now. By from financial year 22-23, we all are seeing all the BRSR reporting for top 1,000 listed companies, and I think now so many chartered accountants are aware about this reporting part. So the rating part or the why it is important, what exactly investors are expecting from us, this probably we can discuss today. So we'll start the session. First of all, why the BRSR or the sustainability reporting or the ESG reporting? There are so many things or so many names. Generally, we call these reports. Sometimes we call it as a ESG report. Sometimes we call it as a sustainability report. Or if I talk about as a regulatory report, so we call it as a BRSR report, which is business responsibility and a sustainability report. So why these reports, or on which basis these reports generally we prepare? So these are the 17 sustainable development goals, which probably you can see on a screen right now, which is flashing on the screen, on which these reports we prepare for the sustainability background. So these are the basis, 17 sustainable development goals. These are something which as a country we wanted to achieve for certain time of period. So as a India, if I talk about by 2070, we wanted to achieve these 17 sustainable development goals, and all the exercise, everything, whatever we are doing around the sustainability, around the ESG, this is something, these are the goals which we wanted to achieve. how the session is going to, we are going to have. So first we'll see or we understand a little bit about exactly for the people who somewhere wanted to understand what exactly is the ESG and what is happening around the globe. So global updates we'll see in a section one. Then we first then understand about something about business responsibility, sustainability reporting. So for people who are probably new and wanted to understand about the BRSR, somewhere have little bit idea about what exactly is the BRSR. So I'll just give the glimpse about what exactly this reporting and on whom, what type of the companies it is applicable. Then we'll come on the topic, the ESG rating and how it is impacting to the companies, how it is, investors are taking all these ratings, what is applicability, how this mechanism is working in India and abroad. So this section 3 is going to be very much in detail. And in between, not exactly in the section 4, but in between I'll be asking maybe taking the question answer whatever the audience or maybe all the people are having. So I'll request to all the audience who are seeing this webinar, whatever the queries you have in your mind, whatever you wanted to ask in between, just feel free to share in the question answer box. I'll try to respond as soon as possible once I get a queries from the moderator. So when I say the global update, first we'll see what exactly is the ESG. I think this is something we all know about now, because when I say ESG, it comes as an environmental, social, and governance. I generally wanted to call it as a GES. Why I wanted to call it as a GES? Reason being, the company where the good governance practices are there, the company where they are following the good governance practices, for good corporate governance are there, they will automatically following the environmental practices. They are having a good environmental practices and they are having a good social practices as well. So the good governance practices are somewhere ensuring the environmental practices and the social practices are in place as well. When I'm saying environmental practices, it means minimizing the impact of the firm on the climate and nature. So the climate and nature that we are covering in the environmental part, which includes your climate, pollution, biodiversity, and resource utilization. Natural resources are very limited in nature. So like water, if I take about minerals, I take about, so these are very limited in nature, and mindful, consumption is something which is expected from all of us. Second is about social aspect. So it is a contribution of the company to the fairness in society. People who are running the company, community for whom we are running the company, this is something we need to talk about. So the social capital, human capital, your customer, your supply chain. This is something we need to take care about that. This, it is all about the social aspect, the contribution of the company to the fairness of society. How much fair we are about our employees, how much fair to our customers, how much fair we are about to supply chain, how much fair we are about to community, the near local community where we are operating. This is all about social aspect. And governance, I don't think so. Being a chartered accountant, it is a new word for all of us. It is something we are, very much aware about the quality of the processes for decision making. So the corporate governance practices, the good corporate behavior, it's all about the governance practices. How these three pillars are now, shaping the expectations. So now the ESG is not a kind of, ancillary services of the businesses or a strategy. It is integrated in your business and in a strategy. It is not a kind of, the sideline activity. It is a part of your business. It is a part of your strategy. ESG has to be outcome linked. You cannot say that it is just on papers. If your company is not able to show the outcomes, it means somewhere ESG just on the paper and or you are just only talking about. And for the purpose of ESG, for the purpose of sustainability, you need to listen your stakeholders. Earlier, whenever we were talking about business part, or maybe we were talking about, our company part. It was all about the shareholders. Now the word shareholder has been replaced with stakeholders. You need to listen your stakeholders, which the definition of a stakeholder is wider than shareholders. It includes more people, more community in the circle. So before deciding which particular ESG issue is prioritized for your company, you first need to listen your stakeholders. And the why it is important for you, why it is very much uh, kind of important for the company. Because if as a company I'm not listening to my stakeholders, I'm not somewhere giving importance to the ESG issues, I will be finding difficult to access the capital. When I say capital, it will be the human capital, it will be the finance capital, it will be the market also. I will not be able to somewhere get a market, and there will be a growing cost for the compliance, non-compliance part. So it's a overall somewhere I need to understand the importance of ESG. Uh, when I say the ESG reporting ecosystem, so it's continuously evolving. Uh, I started looking after this reporting system, understanding this reporting system since 2020. And it was like, I thought it will go around once I start understanding the subject. It will be, with me for the longer period. I should not be update myself for the at least 2 to 3 years or maybe the 4 years, but it's not a case. On a regular basis, I need to update myself because things are evolving very fast manner, in a very rapidly manner. When I say there are many reporting many reporting formats, frameworks are there. There are multiple standards, there are different things which I need to understand with respect to the company's aspect, with need to the country's aspect, which something will be applicable on a certain cases. So if I talk about, there is one reporting ecosystem which we call it as a TCFD. So if sometimes any particular banking companies come to me, or maybe the insurance company is coming to me, I need to understand that, okay, TCFD is something which may be the proper reporting framework for them, because this is something more talking about the climate finance related disclosures. So if you see any of the banking company or any of the insurance company, you will find their reporting on a TCFD framework. IISB also are working closely, and IFRS is also issued the S1 S2 standard, which is now the changing the game altogether. GRI is one of the oldest framework where we have a standard specifically, and most of the MNCs are following the GRI standards. We also have a IR reporting, integrated reporting system, which is very important for the Indian companies. Reason being, SEBI has already recommended to the top 1,000 listed companies to have an integrated reporting instead of the annual report. So IR is something where the six capital specifically we need to implement within a company reporting system, and we can have a integrated reporting system rather than annual reporting system, where we can incorporate non-financial reporting with a financial reporting framework. CDP also one of the reporting framework. Europe also has a different EFRAG system, European Financial Reporting Advisory Group, which has a different standards, reporting frameworks. Purpose, why this reporting is matter, why it is important for all of us. So purpose is, I think, very clear to all of us. It build a trust. It has a better transparency. On top of risk and opportunities, you will always be on top of that. What are the risks as a company you can all face in a future, or the kind of opportunities you can tap in the future. And it also increased the value within investors as well as in other stakeholders. So this slide will give you more clarity about reporting standard and framework, where you can see the first two columns are the reporting standard. So GRI and SASB, these are the reporting standard, which is giving a guideline that what kind of the expectation when you are implementing ESG within your organization, how you can implement that. And other three are other reporting framework or the practices. That means format, how to report that. So this is all about the format, the structure where the IRS communicate about value creation across six capital, support value creation for companies over short term, medium, and long term, employees, customers, supplier, business, local communities, regulators. And it includes your integrated report, which means the financial stability and the sustainability part is being as a part of your integrated report. CDP is something which is exclusively focused on the climate change and water and the forest related disclosures. So that's the reason you will find a very few reports on the CDP part. Only environmental metrics are included. Investors, stakeholder groups are more interested sometimes, and the CDP score is given there. And now from a SEBI side, we have a BRSR reporting framework. So many times the question came in all of us like BRSR is the standard or maybe the reporting framework. So it's a reporting framework, the format, which is a structure how to report a certain things. It is not a standard itself. So basic or most desired element of the sustainability and reporting part of the annual report, it is where the interested groups are employees, customers, supplier, your business partners, communities, and we call it as a business responsibility and a sustainability report. So these are things which I think should be clear when you start talking about the sustainability report or ESG report, and when we are having a discussion with a peer group. When I talk about the global landscape on the ESG reporting and assurance, so IASB has issued last year IFRS S1 S2 that has been launched to effort a standardized global sustainability reporting framework. And that's the reason TCFD has suspended the further release, because now banking institutions, insurance companies will be more inclined toward the S1, S2s. So they have a significant impact on the ways of companies report on the sustainability and likely to be lead to more consistent comparability and decision for useful sustainability disclosures. Now the guidance notes also being issued by the ISSB. There are multiple release also from a IASB side, which you can also always refer to understand what exactly S1, S2 is being expecting in terms of the reporting standard. Similarly, also we have a US SIC and the EFRAG, which has a proposal of the new climate disclosure requirements for the purpose of limited assurance, followed by a reasonable assurance for scope 1 and 2 GHG emission and footnote disclosures. And for the European companies, where the EU Corporate Sustainability Reporting Directive came into force by 5th January. When I talk about this, so this is something expanded a 4x number of the companies in the scope of the requirement of sustainability reporting. And when I talk about initially to the subject of limited assurance, but it will later on transition to the reasonable assurance by the year 2028. In India also, we have assurance which is applicable. So till financial year 24-25, it was mandatory applicable for top 250 companies. Next year, it will be applicable for 500. And then by 26-27 for top 1000, the reasonable assurance will be mandatory for top 1000 listed company. So it's a glimpse of BRSR. BRSR, it's most important for all of us because in India or for the Indian companies, BRSR is the mandatory requirement for at least top 1000 listed companies by market capitalization. So if anyone is asking how to see top 1000, so it's by market capitalization. Now the recent notification also changed when to see top 1000. So earlier it was like on 31st March, if I am in top 1000, for that 31st March, it is applicable for me. But the recent notification has changed the game drastically. Now I need to see on 31st December. For example, today we are in 25-26. So on 31st December 2025, the list will come from both the exchange side. You will get a list of top 1000 listed company, but the BRSR report will be mandatory for those top 1000 listed company for next financial year for 26-27. So that's how the game has been changed from last year. So that's how we need to see the reporting by top 1000 listed companies. The new reporting framework, it is not a new thing actually for the companies. Earlier also we were having a BRR report, which was a business responsibility report for top 1000 listed company. So it's just a replacement of BRR report, and now we call it as a business responsibility and a sustainability report. So now this new format has a qualitative and quantitative indicator. Two type of indicators are we can see here under two categories. So there are two type of categories now. One is the essential category, which means reporting of those essential categories is mandatory. You cannot skip to answer those questions. And the other category is the leadership category, which is voluntarily in nature, which means you can skip if you think that as a company right now, probably I'm not doing anything for the particular question. So that's how the format has been changed. There are certain questions which are qualitative in nature. There are certain questions which are quantitative in nature. Certain numbers also they are asking now. And then these questions are again divided in two categories, essential and leadership, mandatory and voluntary respectively. It is also accompanied with detailed guidance note. So if as a company or maybe as a consultant or whatever the respective uh, in position you are preparing this BRSR report, you are new for that and you are not aware about what exactly the SEBI is expecting as a response of the particular question. So there is a guidance note which will guide you what to respond in a particular query. And when I'm saying a guidance note, that guidance note is detailed in such a manner, like if you can see on a screen on the right side, in first question, it is asking corporate identity number of the company. Now, as a company or as a chartered accountant, we all are aware about what is the SIN number or what is the corporate identity number of the company and how we can get it that. Still, that guidance note is giving you guidance that enter the SIN of the company. You may find SIN by entering the existing registration number or name of the company in Find SIN service under the MCA service on the MCA website. If I'm not aware about how to find that, this guidance note is giving me path to find that particular service. So that is the detailed guidance note SEBI has prepared for the BRSR report. There is also one more very good thing which you will find once you start, understanding the subject. Entities who are preparing the BRSR report, and earlier they were preparing their sustainability report in any other reporting framework. For example, GRI, TCFD, or maybe SASB, or maybe any other framework. And they want to continue with that same framework, but now because it is mandatory to have a BRSR report as well. So what they can do, in a main part, they can continue with their GRI reporting framework because that was their regular feature. And later on, what they can do, BRSR, they can interlink. So if somewhere they find that a particular response we have already responded in the GRI report, so they can just give a link on a response that it is being responded in a GRI report on a particular page number. So that's how you can cross-refer the disclosures in a two reports, not necessarily to repeat that in a BRSR report. For the requirement for the unlisted company also, the committee has been constituted by MCA. So later on, we can see how it will be applicable on the private limited company or an unlisted company. And right now, for the unlisted companies or the companies who are not coming in a top 1000 listed company, there is a light version is also available, which we call it as a BRSR light. So if someone as a voluntarily wanted to start their sustainability report, they can start with BRSR light version. As I mentioned, from 20 to 23, it was mandatory. So I think already 3 years has been passed, 22, 23, 22, 23, 24, 25, and 20, now it is the third year. So now, because 21, 20, 21, 22 was a voluntary year. So 3 years already being passed, and three reports for few of the companies we have seen as a BRSR report. So now it is being maturing. There are certain things which is already being cleared by many of the companies, and people are being more aware about what exactly SEBI is expecting in a certain things. SEBI also regularly being issuing the FAQs, what is the expectation of the report, how they are expecting the responses, where companies are making mistakes, how they can rectify that. Till now, in my knowledge, there is no as such penal or the kind of notices being issued by the SEBI. But in future, we are expecting that this will also come, because once everyone is aware about the expectation, then SEBI will start sending the notices for the misreporting. So this is the reporting structure. So section Annexure 1 and Annexure 2. Annexure 1 contains the disclosure, and Annexure 2 contains the guideline for disclosure of the Annexure 1. Annexure 1 is divided in three parts, which is includes your section A, B, and C. So A is all about general disclosures, B is all about your management and a process disclosure, and C has 9 principles, which is all about how you are running your business, smoothly, integrity, everything. So on the right side, you can see on a 9 principle. I'm not going to describe all these principles in details, because I think most of the audience will be aware about these 9 principles. Till now, any query if we have? So these are just
Thanks, Harsha, for this, interesting stuff and a brief background on all the details. So first question that we have is, what are the key challenges that the companies are facing during the initial stages of the BRSR implementation?
So I think that a screen is now in front of us, which I'm going to explain. So that for sure I'll take, or explain that what are the broad challenges generally companies face on a BRSR reporting in an initial phases. If there is any other query which we can take, otherwise I'll start briefing the slide also.
Yeah. So another question is, so while you are also explaining, that there is this BRSR kind of reporting, can you also explain how is this filled on the MCA portal as well? So how to fill the BRSR light on MCA portal?
So the light version format is available now. Like BRSR comprehensive format is available. Similarly, the light version is also available. It's not on MCA portal. The SEBI format is available. And XBRL filing is something which we need to file with again exchange. So as a company, once your BRSR report is prepared, you can ask the company to get a utility for the XBRL filing, because you and me will not get a utility from like generally we get a utility for normal financial reporting. So that's how we do not get a utility for the BRSR reporting. We need to get the utility from the company side, from the exchange. They provide us the utility. Then we prepare the utility with the BRSR reporting data. Once we validate the utility, we give that utility again to the company, and they upload the utility on the exchange. So that's how the XBRL filing generally we do for the BRSR reporting.
Okay, so it's governed by more from the exchange side rather than
More
the
from the
MCA
exchange.
side.
And once you can do the search BRSR reporting. So there is a tab on NSE and BSE for the compliance corporate filing. You will get a all BRSR reporting with XBRL filing on that tab.
Understood. Thanks for that. And the last question currently is, many companies have, a strong ESG practices, but they still get excluded from the ESG indices due to maybe they are from the controversial sorry, maybe due to because they are on from the controversial sectors, like in case of ITC, or so how should the companies balance such business realities with the investor expectations as well?
So ITC example I have already taken for this particular webinar. So once the slide will come, we can discuss the detail about the ITC, because initially on Indian exchange it was not considered, because of ITC product generally we consider as a sin product. So they were not being allowed for the ESG, but now because their ESG ratings are good, so now they are being allowed. So that example I have already covered. So once we start with the ESG credit rating, so that we will discuss.
Okay, great. Thank you, Siharsha. And I think over to you for the remaining part of the challenge.
Yeah. So the first question which you have asked about. So there are certain broad challenges which personally we faced in initial phases. Like once a company start with the BRSR reporting on an initial stage, like first year or second year. So in that cases, first problem generally that they face is the data collection. Why the data collection is the problem for them? Because this data is not a journal data or a financial data which readily is available with them. It's a non-financial data which is not directly available in their system, or maybe they are not even capturing on a regular basis. For example, if I talk about, we always have a vendor master with us whom we are procuring the goods. So that or every company is having a vendor master, the vendor appraisal system is there, everything is there. We have a classification of MSME vendors, non-MSME vendors, everything is in place. But in that vendor appraisal system or vendor onboarding system, most of the companies are not having a system. Like we are not asking whether they are having a good ESG practices or not. This is not in our vendor onboarding system. I think you also consider this. As a chartered accountant, many times we also get a vendor onboarding form from many of the listed companies, because when we are their vendors for providing us services, they send us a vendor onboarding form. We are not able to see a column where they ask us whether certain ESG practices we are following or not. If they are not asking whether I am following certain ESG practices or not, they will not be able to find out that whether I am ESG compliant or not. If they are not able to find out whether I am ESG compliant or not, how they will be able to answer my principal two question, the essential indicator, which ask me whether my sourcing is from sustainable sourcing partner or not. In principle 2, there is a essential indicator question number which asks how much procurement is being done from a sustainable sourcing partner or non-sustainable sourcing partner. Now it is very difficult because I have a total procurement in system, the total purchase in the system, but the bifurcation, that how much procurement is from sustainable sourcing partner and how much procurement from non-sustainable sourcing partner, that segregation is very difficult, because that segregation data point I don't have in my system. That was not done in an initial stage when vendor onboarding was done. So that data collection is very difficult because of the type of data which we are asking for the purpose of BRSR report. Many times, like job creation in the smaller town. So when we have a list of our employees, we capture their addresses and everything, but we are not having a system list that how many employees we have in our entity who belongs to the particular city, metropolitan or maybe non-metropolitan or maybe a particular city, and the RBI classification we do, so that at the end of the year, if someone asks that as per RBI classification, how many people comes under category 4 or category 3 or category 2 or 1, that classification I don't have. So that's the reason data collection is something one which is very difficult, because initially you need to guide them, you need to make them understand that certain things you need to implement, you need to make the things at place, so that next year at least you can get a accurate data. First year sometimes you just make a numbers on around, like, okay, this is something we can get as a number. Audit is, I don't think so in a first year it's possible, because if I'm not even able to get a number, or maybe data from a company, how I will be going for the reasonable assurance, or maybe even a limited assurance. So many follow-ups are needed to capture the data, timely involvement of all these departments. And second important aspect here, those departments are involved who are not even in a practice to work on these deadlines. Earlier finance departments are familiar with work on a deadline, like, okay, my balance sheet deadline is 30th May, so I need to complete my balance sheet task by, for example, 30th April, or maybe by 15th of May. But the other department, the non-financial data department, they are not familiar with working on these deadline parts. So the smooth data collection process is something which is the first task. Expectation setting, so the company practices, initiatives, action plan, KPIs, leading peers to fix expectations. This is something, make them understand why we are asking this, what is the purpose, what is the importance. This is something important. We generally conduct a training, we make them understand this is a new requirement, this is how it is going to impact a company, this is going to be a negative for you if you will not provide us, you will not get orders from your customers, it will be a reputational loss for your company. Still many times it takes a time for the people to understand the requirement. One-way communication, so delay in department interaction, because these new departments are now coming in a picture, so challenge to keep in them in a loop. Data validation, now you get a data, you have everything with you, but the validation is now again an important step for us. So whether the data is accurate or not, if there is any error, so many time it happened, and actually it happened with us, like, you are not able to get a verified data, one data which is you are presenting on page number 1, and then on page number 10 it is not even reconciling. So there are many errors which you will find on a collected data. Language expectation, this report, as I said, it is qualitative and quantitative. So when I said qualitative, you need to write a lot. So language and narrative need to be set in advance with the stakeholder. It should be clear so that stakeholder can understand. It is not expected from us that we are writing in a set of, in a kind of tone or a manner which is very difficult to understand to the stakeholders. So language expectation needs to be understand. And ownership of proofreading, it required at least 3 to 4 times proofread, because we have seen in past that different people, if they are not somewhere reading that or understanding, every time the error will be there. Like, once we say the median salary, so people who are first kind of, there is a set of people who will understand in a different manner, there will be a set of people who will understand in a different manner. So you need to discuss with a different set of people so that you can be able to get on a proper decision. This is something we wanted to communicate in way of BRSR report. For example, when I'm giving the total number of our staff or people, everyone know how many of the KMPs any company can have. More than two, we all know, because CFO and a company secretary will always be a part of KMP, and apart from that, there will be MD also. There other people can also. So if someone is saying that only two KMPs, this is something we need to recheck. How it can be two? MD is also a KMP. If you are considering MD in a board of directors, then you need to make a footnote that MD is already considered in a board of directors. Therefore, we are not considering that person in a KMP total. So that clarification you need to be very clear when you are drafting a report. And non-clarity of the leadership indicator. Right now, people are not aware about and not clear that even you are not responding to the non-leadership indicator, you need to keep that section in your report. Just we need to mention that it is we are not responding or not applicable, something like that. You cannot remove the section from the reporting framework. It's a reporting framework, it's a structure. Can I amend the structure? Answer is no. Can I amend any table or maybe any part of section? Answer is no. So that we need to understand very clearly. Now we'll come on the our topic of the day, which is the ESG credit rating. So when I'm saying ESG credit rating, it's actually very important and emerged as a globally recognized benchmark for assessing corporate sustainability and ethical performance. In India also, if I talk about, it is now very much important for all the corporates, because when I'm talking about ESG credit ratings, it measures my credit worthiness more than financial worthiness. It is including my non-financial parameters as well. So it is including my long-term non-financial risk and opportunities also. Firms or the companies who are having strong ESG credit ratings have more benefits. So there are certain case studies also which I have incorporated in this presentation. We will discuss, and maybe one of the participant already given the query why ITC is not being benefited till now with a good credit score. So once you have a good ESG credit rating, there are many benefits you have as a reputational advantages, greater investor confidence, and it is also help you to reduce your finance cost as global investor increasingly integrate the ESG factor in their decision making. So the companies where investment is being done by the global investors, in that cases, it is reducing the finance cost in a drastical manner, and they are somewhere giving importance to the ESG to the some extent, which is very important for us to recognize in our financial statement, or maybe I would say in our annual reports or integrated reports. If I talk about global or an Indian context, so in India, this ESG ecosystem has been shaped not exactly as a regulatory. If I talk about regulatory already being shaped, we have a complete regulatory system, not just by the investors. So mandates are also there. Stock exchanges are now also looking for the ratings, and global supply chain expectations are also there. Real life examples, if I share with all of you, I have seen the companies, I have seen the examples where the customers are asking for the ratings, customers are asking for their ESG report, how they have incorporated the sustainability and ESG within their business part. Many times it has been observed that company face like, okay, we are ready to implement the ESG, but somewhere customers are not ready to pay for that cost, but sooner or later they will pay. That is the case which has been observed and experienced by many of the organizations. So if I talk about the regulatory aspect, regulatory approach. So in India, for ERP, so ERP is the ESG rating providers. So you will find this word now a lot now in our upcoming slide. So ERP full form is ESG rating providers. So after the BRSR notification, so in 21-22 BRSR was voluntary, 22-23 BRSR was mandatory. In the same year, SEBI has issued the consultation paper for ESG rating provider in 22, followed by regulatory framework in March 23. So March 23 was there where SEBI has already issued a notification that because need was already there, that there should be a rating providers who should analyze the BRSR report, who should analyze the sustainability reports and can provide the rating. And it was not a new thing actually. If you think that that was the new part, it was not new part. It was through amendment of SEBI Credit Rating Agencies Regulation 1999, which was earlier only for the financial credit rating. Now it includes also ERP was formerly brought under SEBI MBIT for the ESG part as well. The regime was operationalized by SEBI Master Circular in May 2024, and ESG rating in India was structured, credible, and regulator supervised ecosystem. So now we have a regulatory system approach. We have agency regulation 99 in there. ESG credit rating system is also in place in India. So how ESG rating provider system works in India? There is a two-tier ERP system that we have to balance innovation and investor protection. So there are two type of categories, which type, two type of the ERP we can find. So ESG rating provider, as I said, ERP. So there is two category 1 and category 2. Category 1 is for the larger players, because for that net worth is something on a very large that they need to maintain something around 5 CR, what if I can recall correctly. In category 2, the net worth which they need to maintain is I think around 5 to 10 lakh rupees only to create a ERP. So category 1 is to must to maintain high capital and the governance threshold. They need to maintain the people with a similar experience of I think around 5 people they should have within their companies. Certain infrastructure also they need to have. For category 2, there are certain relaxations, so lighter requirement. They can only have a 2 people. Infrastructure also they are also relaxed. So it encourages the entry of the innovation. If you think that I have certain innovations, I can also do this thing. But somewhere that restrict me because of the net worth requirement, or because I do not have that infrastructure which category 1 should have. So in that case, you can also register yourself for category 2 ERP, which is a smaller outfit for the purpose. Second thing which we also need to understand, these ERPs are permitted to adopt either a issuer pay system or subscriber pay model. We'll understand what is the meaning of issuer pay and the subscriber pay model, but these are the two models which are available right now. You can either have a issuer pay model or a subscriber pay model, but you cannot opt for the hybrid model. If you think that I will opt for the hybrid model, so that is not available. It is prohibited strictly. In terms of the classification, ESG rating, so SEBI has also mandated the product clarity. What kind of the product as a ERP you can provide to the company. So that is being distinguished between impact rating and risk rating. Now we'll also understand what is the meaning of impact rating and risk rating. So we have a separate slide for that, which require a full transparency, methodology, weightage, and assumption. So company, whosoever you are rating, you will either give them risk rating or you will give them an impact rating. Okay. The introduction of core ESG rating. Now, what is the meaning of here? Core ESG rating. We all know now assurance is also being introduced in India, BRSR core assurance. So if I am rating any of the company on the basis of BRSR core, on the basis of their assurance report, so that will be considered as a core ESG rating, because that rating is based on the audited data. So that is based exclusively on assured BRSR core data, which also ensure sustainability scores are linked to the independently verified disclosure rather than voluntarily self-reporting. My BRSR reporting is just a self-disclosure. It is not being verified by any of the independent agency. It is just a disclosure by the company. But my BRSR core is a reasonable assurance report by the third party. If my ESG credit rating is done on my BRSR core, the reasonable assurance report, for that, if I talk about the transparency methodology, weightage will be more. So it ensures the score is being more on independent verified data. Governance, oversight, IFSC extension. So SEBI has also have certain system that all these ERPs should have a rating committees, nomination remuneration committees. They should conduct annual internal audits. So these, ERPs also need to have an internal audit. Whatever the ERPs right now we have in India, how many numbers of ERPs we have right now in India? Any idea from any of the participant? So it is 18. I just checked today on a SEBI website. Total 18 ERP we have right now in India, including category 1 and category 2. So these 18 ERP also need to have an internal audit for their credit ratings. So that type of the mechanism is being introduced by the SEBI. They need to have a committees. They need to have a 2 years compliance. Like for category 1, they need to have a regular internal audits. But for category 2, they have granted a 2 years compliance buffer. So that's how certain compliances are there, governance are there, oversights are there. So it's a full mechanism which is being introduced for the ESG rating providing systems. IFSC extension is also being provided where they can also have a operate in an international financial service center under IFSCA oversight, ensuring seamless regulator coordination. So that option is also being given to them. If I talk about what is the implication and the market impact, so from Master Circular of May 24 and the subsequent impact, now transparency, accountability, and consistency in ESG rating we have seen. We are regularly observing in the reports. For issuer, this provide credible benchmark. For company sites, they are now being more vigilant about their reportings because they know someone is going to review their report, they are going to provide the ratings. For investors, now it is a decision making tools. For regulators, it is strengthening the ESG ecosystem. So I just given the some screenshot. It is from the SEBI website. Just you need to Google the SEBI registered ERPs, ESG rating providers. You will find a list. You can see here it is saying one of 18 records. So total 18 ERPs are registered till the date. When you see, so you will find a list, their name, their registration number. In registration number, you will find their category, whether it is category 2 or category 1. Then model also, it is mentioned here, whether it is issue pay model or a subscriber model. So it is mentioned clearly whether they are working on issuer pay model or a subscriber pay model. Then their address, who can be contacted, their email address, their telephone, and their validity. Validity means from which date they are registered. It is important. Perpetual is okay, but from which date? Because before that date, no ESG rating should be issued from their side. After that date, they can issue any of the ESG rating. So few names I think you can see on the screen. I just randomly copy pasted screenshot. So any questions from the slides we discussed till now?
Yes, I think we have a couple of more questions. Now that uh, BRSR has been, come into place, and we see that it has both essential indicators and leadership indicators, both. Okay, so how should a CA advise the management on setting the right balance between compliance and aspirational disclosures?
So, see, compliance is something which you cannot escape. So, essential indicators are mandatory for us to report. There is no option for that. In terms of aspirational, so leadership indicator, what generally we can do that, just check the status right now. What is the position? if you see that current position is not good to report, you can suggest that this is something we can do for the betterment in future. We can set the timeline, we can set the benchmark, and then once we are in a better position, then we can start the reporting of the leadership indicator. Till the time, we should skip that particular leadership indicator, because we are not at present, prepare for that. And any negative comment in leadership indicator probably not being done by any of the company, and as a consultant or maybe as a chartered accountant, we will not be going to suggest to any of the company. So we need to give them roadmap that how we need to prepare for that.
Right, understood. There's this proposal from MCA to extend the BRSR to unlisted companies as well. So, how do you see that in terms of an impact to the SMEs, and also as a follow-on thing would be like how do you or what role can CAs play in preparing for them? If you can throw some light on that.
So, see, BRSR proposal in terms of for the SME part, that will come on a very later stage. But if I talk about the current position, the value chain partners applicability is already in place, which will be applicable from this year only, because that was deferred last year. But this year it will be applicable for at least top 250 companies. So if as a SME, I am coming in a list of top 250 company value chain partners. So for me, the compliance of ESG is mandatory, because I am a part of that top 250 company value chain partners. And if I need to continue my business with that top 250 company, I need to be a ESG compliant. So it is for my survival purpose. It is for the survival of my business. And as a CA, what I always, give them suggestion that it is now a, question on for my survival of business. Because as a SME, for example, if I was doing a 50 CR business with the Reliance or maybe Adani or maybe by any of top 250 company, now it is important for me to follow the ESG compliances, because otherwise they will not be able to continue the business with us, because that is the mandatory requirement for them. So for the 50 CR business, if I need to spend 5 lakh rupees or maybe 7 lakh rupees, whatever for the ESG compliance that I need to spend, I need to see for that I am saving my 50 CR revenue. So that's how somewhere strategy I need to give them to my SME partners. The roadmap I need to give them to my SME partners. Gradually, they will understand. It will come on a in a complete circular picture. So that's I always see as a circular ecosystem where the SEBI also opted for the compliance of the BRSR reporting.
Right. Thanks for that. Maybe, I will take up next questions after a few slides of.
Okay, fine. So, how these ERPs are taking the assignments of rating? So, let's understand. So, under the SEBI regulator frameworks, as earlier we discussed, there are two models which these ERP can opt for. Hybrid model, as we discussed, it is not allowed to them or it is prohibited. So there will be a one model which is the issuer pay model, where companies are seeking rating must enter into the formal agreement with ESG rating provider and supplying disclosures, sustainability report, and BRSR filing for evaluation. Here, as a company, I am seeking for the rating. I am going to the ERPs that I want a rating for my company. These are my informations. If any other information you want from us, please let me know, and please rate my company and provide me the rating, proper rating for my company. So this is the issuer pay model. I am paying for my rating. The second model is the subscriber pay model, where as a ERP, which is initiated by the ERP or an investor client. Here the company is not coming to the ERP. Here, either the investor is coming to the ERP or ERP itself is initiating it, with SEBI encouraging engagement between ERP and rated entity for the factual accuracy. So here, what is doing? ERP itself is picking up the data, and based on that data, they are giving a rating to those companies. Now, here, an important part for all of us is that SEBI in 2025 circular introduced a standardized issuer feedback mechanism where they need to ensure the companies can review and comment on preliminary findings while preserving ERP independence. Earlier, what was happening in a subscriber pay model, ERPs were just a minute. Sorry. ERPs were picking up data from the public domains and giving ratings to the companies without sharing their observations with those companies or without giving them a fair chance to comment upon the data. So, therefore, SEBI has recently issued a circular where standardized issuer feedback mechanism was introduced. So, here companies now can review and comment on the preliminary findings, but they also are preserving the ERP independence so that it is not being hampered the independence mechanism, and subscriber pay model can work effectively. So the disclosure of rating, how it works, where you can see, how you can understand what are the regulatory reports, what are the company reports, media news, and everything. Everyone wants to understand how I can access those reports, because year back, if I remember correctly, one of the conference there was a query from one of the participant if I wanted to see these ratings, how, because that time these reports were not publicly accessible, but now SEBI has prescribed the different disclosure requirements depending on the business model. For issuer paid rating, if I am working on an issuer pay model, so for the issuer paid rating, in this case ERP will disclose or publish a full report, a complete report with rationale on their website for public access. So now you can access all these reports on the ERP website. You just go on the ERP website and you can download, you can see these report, full report, not just the result, the complete report with a rationale of rating, with a reason of rating, how they derived. In this case, a subscriber paid rating. The second option, ERP may restrict detailed report because it is, worked on the limited data which was available on the public domain. So they restrict the detailed report on the subscribers, but must disclose at least basic rating outcomes, including company name, sector, score, grade, date, and ERP details. So all these details are also available on ERP website. So in both cases now rating data is available. In issuer pay model, you will find a complete report. In a subscriber pay model, at least basic report you will find on their website. Additionally, stock exchange also now issued a circular where NSE and BSE are now required to display ESG rating of listed companies and securities on detected tabs, mirroring the practice of credit rating. So, like previously, we were having a financial credit rating system. Similarly, now ESG credit rating you can see on a exchange portal. So these are the mandatory disclosure on the exchange. Integrate the ESG score into mainstream of the financial information architect. So just an example of issuer pay model, I just given a screenshot of one company here. How you can see, just go on one of the any of issuer pay model company. I have just presented you list of all the companies, how you can find on the SEBI website, how you can see who are registered for issuer pay model, who are registered for the subscriber pay model. Based on that, just go on their website. On their website, you will find the ESG research report, and on their ESG research report, you will find a download link, their score. In left hand side, you can say that because it is these are the issuer pay model. So in case of issuer pay model, you will get a complete full access of rationale, full report, everything. So once you download this report, whenever you have time, you will see the complete exercise, how they derived this ESG score of 66.30, the methodology, the scale, the regulatory disclosure, the press release, everything is available here. Similarly, if I see the subscriber pay model, so NSC also now is the one of the ESG credit rating provider. This is the game changing registration. Earlier, I was seeing like Care, ICRA, CRISIL, because they were in a financial credit rating part. So that was expected that they will be also a ESG credit rating provider. But when the NSC also come for the ESG credit rating, so that's the game changing for all of us. But they are in a subscriber pay model. So when you go on their website, so you will find that till now, because they are recently registered, they registered in the August month only, not very, in a previous month or maybe before that. So till now, more than 500 companies they have reviewed and they have given the ESG ratings, and you can download and you can see the results. So that's how you can access all these reports whenever you wanted to see how they are working. With respect to the withdrawal of the ratings, so for that also there is certain norms. So SEBI has imposed a strict condition on the ESG rating withdrawal. It's not easy to withdraw the rating. So like if for the subscriber pay rating, withdrawal is permitted, because that was done so motive by the ESG credit rating provider. It was not initiated by the company. So it is permitted only if there are no active subscriber. So if as an ERP, I am seeing that for that particular company, there is no active subscriber. No one is looking for that company ESG credit rating. Then in that case, I can withdraw that rating. I know I can withdraw reviewing the ESG report or sustainability report of the particular company. Again, for that, there is a restriction. If the rating feed into broader product like it must continue. For issuer pay rating, alignment with credit rating norms apply. A rating may be withdrawn only after at least 3 years or 50% of the instrument tenure, whichever is longer. It's not easy for the issuer pay model. You cannot withdraw just because I do not want to continue. And with no objection certificate from 75% of the bondholder by the value. So any of the listed company, it is very difficult to get a 75% shareholders no objection letter that they do not want to continue for the ESG credit rating. Issuer level rating may also be withdrawn after 3 years of continuous coverage. In all cases, withdrawal must be publicly disclosed. You need to disclose publicly that now you will not get any ESG credit with clear reason why company is withdrawing. Thus provision why it is, because it should not be a case that suddenly you are disappear. Because why any company will discontinue the rating? The reason should be disclosed publicly at large for the benefit of the stakeholders. Ongoing monitoring and the market impact. So every ERP is being expected to have an ongoing monitoring. So at least for the subscriber pay model, because that is being, they are doing itself. So ongoing monitoring it's being expected. So immediate update must also be provided by paying clients, mandating them real-time updates, disclosures, also with the same rigor as a financial credit surveillance. So regular updates are being expected wherever the changes they are able to see, whether upgrade, downgrade, any outlook revision that must be promptly disclosed on the ERP website and to stock exchange website. What are the key criteria for ESG ratings? What exactly they consider? So generally, the sustainability reports, the BRSR reports, these are considered. So in Indian context, these ESG ratings increasingly ask for the ESG reporting. So I think many of the participants has observed that now with BRSR reports, companies are also issuing their sustainability report, their ESG report. And the reason why they are additionally issuing the ESG report or a sustainability report, because BRSR framework has a limited criteria. Whatever has been asked in the format, only those questions we can respond. If additionally, as a company, I am doing in a ESG circle or ESG criteria, I cannot respond that in BRSR report. So if I have wanted to communicate that additional aspect to my stakeholders, I need to have a separate sustainability report or a ESG report. So that's the reason you can find out a different report. We call it as a sustainability or a ESG report. As I mentioned, the core part also, so that is separate now it's being. So center framework is BRSR report. More recently, BRSR core, which mandate disclosure of the quantifiable assured data. So why BRSR core was separately introduced for the purpose of assurance? The reason was, if as a chartered accountant, if someone is saying to provide me a assurance, I always need certain numbers so that I can verify the same. I cannot provide a assurance on qualitative data. Okay, a future outlook statement. So from BRSR reporting framework, there were certain quantifiable numbers which was expected and was introduced as a BRSR core. The numbers where a assurance provider can provide a assurance. Okay, because it's not possible for me that a commentary I can provide a assurance. So that's the reason a core was separately introduced. That was a query previously from many of the participants. Why not assurance was directly introduced for the BRSR comprehensive format? Why again separate format is being introduced? So that's the reason a separate format was introduced, because comprehensive format has both type of the disclosures, qualitative and quantitative. And assurance can only be provided on a quantifiable numbers, or only for the numbers, not a qualitative data. So that's the reason BRSR core. And ESG rating on a BRSR core is something which is more acceptable in a investor or maybe within a stakeholders. So for ERPs, form that backbone of the assessment as a rating must be grounded for the verified data rather than self-declared claims, thereby reducing risk of greenwashing and ensuring comparability across the company. So this is one of the criteria that we need to understand. So right now, if I say like for financial year 25-26, top 500 companies has a mandate for reasonable assurance. But if you think I need to have a rating for my company, ESG rating, you should go for the assurance. Because if you have a BRSR core assurance or maybe the limited assurance for the BRSR comprehensive, your rating will have a more credential rather than just a rating on the BRSR comprehensive. So that somewhere we need to understand. Further, SEBI has also directed to publish a transparent and detailed rating methodology, also defining the indicators, weightage, score scale, and differentiate between risk-based and impact-based rating. We will understand what is the difference between risk-based and impact-based. So that is again, we need to give a complete clarity. Whenever you have time after this webinar, just go on some website, see how they are mentioning, they are giving the weight, how they are scored. Certain ERP will be giving a score like numbers 68, 66, 55, 74. Certain ERP will be giving the numbers, giving the grades A plus, double A, something like that. So that grades how they are defining. So that can be again a criteria. So these are certain things we need to understand and we need to make sure that these are the criteria. If we are meeting, then we should go for the rating. Otherwise, somewhere first we need to prepare ourselves, and then we should go for the rating purpose. Any query from any of the participant?
Yes, Harsha. So I'll take couple of more queries. First is, what type of evidences and documentation are required for the third party assurance of BRSR core disclosures from FY 2024-25 onwards?
So that list is actually very long because BRSR core again has 9 attributes, and for each attributes, you need to make a list that how you can get it audited from the assurance provider. So it's the same kind of the task generally that we follow for the financial audit. Like for inventory, if I need to go for the audit, these are the certain documents I need to provide to my auditor so that auditor can be in a comfort that okay, inventory is fine. So similarly, if I take just one example from BRSR core, which has just again I'll take a common example of financial indicator, which is average payable part. So there is one indicator which talks about what is my average payable turn count. So how you can make sure or how you can give a comfort to your auditors that if I'm saying my average payable turnover is approximately days 25 or 26, so how you can get it audited? You will give them calculation first of all. This is how you calculated the average payable turnover. Once the calculation, the auditor is has comfort, then he will ask for the numerator or denominator where that number is being you have derived. Then you will show them the balance sheet that this is the audited balance sheet from this, where we got this number. Then probably person will get a comfort that okay, these numbers are from audited balance sheet, and I should not go in detail because those numbers are already being audited by the statutory auditors. If those numbers are unaudited, then probably I'll go more in detail that okay, let me get more detail about those numbers. But because statutory auditors already signed the balance sheet, I do not require more details. So similarly, there are more non-financial indicators. There are more details which every time you need to get it. Source document you need to find out which how you can make a comfort for the assurance provider.
Okay. So, Arsha, some time or some moments back, you were also explaining that, that CRISIL and other credit rating agencies were already there and, they were rating already the financial elements of the companies. So how different is, ESG ratings from the traditional financial ratings, and why are they becoming more and more important for the Indian companies?
So, ESG rating is different because it is not covering your financial aspect, it is covering your non-financial aspect. It is also having a two type of rating, which we are going to discuss: risk rating and outcome rating, impact rating. So that we'll discuss later how we do that. And why it is important, because now if you are somewhere expecting certain investors to invest in your companies, so these investors are now looking for the ESG aspect more. Reason being, why? I need to see sustainability of my business. If my business is sustainable in longer period, then only I wanted to invest in your business. So if my business is sustainable in nature, then I am inclined towards the investment. Otherwise, if I see that this business is having more emission, or maybe it's not environmental friendly, or maybe not more social friendly, I can foresee that government will come certain negative impact in near future where the product can be banned, where somewhere government will not provide a certain incentives, or maybe somewhere restriction can be imposed. So if that kind of the scenario I can somewhere foresee in near future, I can, I'm not somewhere inclined toward to make that decision of the investment. So that's the reason now investors are also looking for the ESG ratings to including the financial ratings.
Understood. I think we can continue with the next part, and then we'll take up some more questions after some.
Okay. So, as I was mentioning, we'll understand what is the difference between risk rating and an impact rating. So, two type of the ratings you will see in a ESG credit rating. One will be the impact rating. In ESG, generally we call it, when we call, talk about the materiality, also we talk about the double materiality. In a financial statement, generally we have only a single materiality, which only talks about the financial materiality part. But in ESG also we talk about the double materiality, which includes my impact materiality. So similarly, in rating also, we have a two type of rating. One includes impact rating and other is the risk rating. My impact rating means assessing a company positive and negative impact. Here I am talking about result. Impact means result on environmental and social parameters along with governance, essentially rating the company footprints on the environmental and society. So here I am talking about the result part. Whereas, vis-a-vis, if I talk about the risk rating part, so it is assessing a company vulnerability to the ESG related risk, the what I can foresee in near future, and how those might affect the enterprise value, the business valuation. Generally we talk about, often termed as a ESG corporate risk rating or financial risk rating. So if somewhere, if I talk about my business valuation is for say 50 CR or maybe 100 CR, but if I can foresee a ESG related risk, my business is more somewhere is a carbon emission business, and I can foresee that government can come up with a certain regulations which can have more I can say the taxation, maybe the carbon taxation, or maybe like now Europe has CBAM regulations, where now you can right now only filing returns, but later on you need to pay certain amount to export certain goods. So that will impact your export or maybe impact your revenue part. So that will affect your enterprise value. So that generally we call it as a risk rating. So out of these two, you can choose one type of rating, and accordingly you can have a methodology once you are start rating of enterprises. Just again, one of the example how generally the grading system works for all the ERPs, different grading system you can find out. Just this is just one of the example I'm showing you on a screen, like scoring system rate. So they have given like if it is a 70 plus, it will be the minimal risk. Performance band will be the leader, grade will be A plus, 60 to 70, low risk, good, A. So the grading system they mention on their website. If you go for any other company or any other ERP, they can have a different mechanism. So every ERP has a different mechanism, but they have mentioned what is the methodology and what are the criteria they are using for the ESG grade purpose. I think importance part we already discussed a lot, but why it is important in India? So first of all, access to the capital and the market opportunity. If you have a good ESG rating, which is emerged as a decisive factor, so it will give you access to the capital and market with the highest ESG score. You will get more attractive institutional investors, pension funds, souvenir bonds, ESG focused mutual fund. I think many of the participants can now recall there are many mutual funds which are dedicated to the ESG. There are many specific green bonds we have seen in past. So many examples now we have around us, which is showing importance of the good ESG rating. We also discussed few example on the later slides. how the excess of the capital and market opportunities can have with a good ESG rating. Reputation, brand value, and stakeholder trust. So this, I think, very clear to all of us. If you have a good ESG ratings with an independent validation with a corporate responsibility, so it always give you a more reputation. It always enhance your brand valuation. It can also give you a leverage in the market and a competitive differentiator. This is I have seen personally reason from outside India. This it it has more importance because your consumers, your customers are more asking about your ESG practices, and they are asking a independent verification and independent assessment. And these ESG credit ratings can be a one part of one of that independent assessment and verification. So with that, you can have more stakeholder trust, your consumer trust, and you can get more businesses from outside India. Regulatory compliance, risk mitigation, and strategic alignment. So gradually, it is coming as a part of regulatory risk management. Right now, if I talk about, if you ask me whether it is a mandatory requirement in India, so my answer is right now it is not a mandatory requirement in India, but yes, as a good governance practices, as a best governance practices, many of the companies are optionally coming for the ESG rating purpose. Investor decision making and benchmarking. So for investor purpose, these are highly recommended. And now funds, ESG funds also Indian has been launched by major of the AMCs, SBI, HDFC, ICICI Bank. Ratings are central for the fund constructions, rebalancing decisions. Nifty also has a 100 ESG index, SP BSC 100 ESG index. So that's the reason now, if you wanted to be a part of that index, you need to have a ESG rating. Otherwise, you cannot think about to be a part of that index. So now we'll discuss few case studies, just few examples. Maybe you can have more examples, and you can just drop the examples in a chat box, which we can discuss also in the later stage. Some of examples I have on my screen right now. One of example is JSW Energy, where what is the impact of their ESG rating. So if you see, it is a positive reason. They have inclusion in their FTSE 4 Goods Index, which boosted their investor interest and sustainability credentials. As a part of JSW Group, the energy part, they reflect their highest ESG standards. This particular recognition came as the company committed to scale of their renewable energy capacity from 20 gigawatt by 2030. So the reason why they got this, so that was the reason. And it is strengthening their reputation globally and improving the access to ESG aligned funds, and validated their clean energy strategy, making the ESG rating as a catalyst of capital inflows and stakeholder confidence. You can also recall that India also has a certain timelines for green energy, clean energy. So we were having a timeline of 2030, I think, for 50% clean energy, but that we have already achieved by 2025. So that was floated by the ministry on a various portal and few days back, that this is something we achieved. So these companies, when somewhere contributing to those targets, so that's how they are getting the credentials, they are boosting the investor trust, and then getting a benefit from the government schemes as well and incentives as well. Second example is from the Reliance Industries Limited. So again, the impact of ESG rating is positive on them, where this ESG has improved, supported their global capital raising and long-term investor appeals, where renewable energy, circular economy initiatives, and transparent disclosures are having an improved scores on MSCI and a Sustainalytica. So today we were more focused on the Indian ESG credit rating system, but globally also there are various ESG rating providers who were earlier also providing the ESG ratings. So those are the entities who are providing ESG scores. What was the benefit? So Reliance were able to get a strategy of raising green bond and tapping the ESG sensitive capital pool because of their good rating, ESG rating from those entities, and it was aligning their transition narrative from an investor preference. So that is one of the example. Federal Bank. Probably when we saw the Federal Bank on a exchange, NSE, BSE, sometimes we were not getting those kind of feeling whether how the bank is performing, what is the status, or maybe, you know, that kind of the feeling we don't get for the particular institution. But because of the ESG rating, it is a positive rating for them. They got a very positive performance, improved brand equity and stakeholder trust. It was recognized as a ESG performer in Indian banking sector and received ESG Champion of India 2024 award. They were also ranked as a highest Indian institution in IFC climate reporting ranking. So for banking institution, I'm not sure how many of you are aware about. IBA and IFC has a tie-up for all the banking institution, and they have a systematic, appraisal system for the climate reporting system. So for that, they got the IFC climate reporting ranking, and they also won the gender equality recognition. So that was a very good credential for the Federal Bank. If I talk about the negative aspect, how negatively can also be a ESG can be impact. So Vedanta can be taken as an example where the impact of ESG rating, if we say as a negative, so there are certain controversies which reduce the ESG ratings, which triggers the investor concerns because when I talk about the Vedanta, so they already faced many governance issues, the environmental controversies, also their weak leading ESG ratings relative to the peers, and then there were certain scandals also, the ESG related consulting risk also which were coming. So many things were happening all of the arounds, and that was impacting their ESG rating on a lower side. And because of that, there is a limited ESG fund participation. They got the reputational constraint was there, and because of that, again a higher cost of capital and the constrained access of the responsible finance, which they faced in a recent year. Any question, Veer, from any of the participant?
Yes. So I'll take up some more questions. So first is, how do we differentiate between risk-based ESG ratings and impact-based ESG ratings in practical terms?
So that just you need to see if the rating is on an outcome basis, on a result basis. So that is the outcome impact base. And again, when you see the document, it is clearly mentioned whether it is impact based or whether it is risk based. So I'll show you on a screen also once we're done with the presentation. It is always mentioned on the screen. And once you start reading all these reports, you will get a clarity about whether it is on an impact base, whether this report is talking about results or this report is talking about the risk part. So that gradually you start understanding.
And both have their own importance and their own stuff. Okay. So do you see ESG ratings, becoming an influential part and as influential as the credit ratings in determining long-term investor confidence in the Indian companies?
Yes, it is more important, and I just again give you update. Like last year, also RBI has issued one of the notification which was given to all the bank for their borrowers that they should have a reporting specifically for their all the assets and the liabilities with respect to the ESG part where the governance structure was there. So when the banks will start for their ESG reporting for all those four pillars, ultimately they also need to start have ESG credit ratings for their borrowers. So when they need to have the ESG credit ratings for their borrowers, we though right now we are only able to see few ratings of the good, top listed companies. Later on, by next 2 to 3 years, or maybe in next 4 years, you will see for maximum borrowers the ESG credit rating, because bank will be requiring that. So for it is having importance, because bank need to find out whomsoever they have given the loan, whether that loan is being somewhere assessed, or maybe they have assessed whether ESG part or not, that business is being safe or not, in terms of the climate finance or in terms of any other ESG risk or not. How that we can assess as a bank? Without ESG credit rating, you or me or will not be able to assess that. So the importance is there, and that's the reason. See why NSC has come up for the rating purpose. Earlier, NSC was not there. So we can understand the importance that why these players are coming for the rating business.
Right, right. Thanks for that. And maybe I'll take up one more question, and then what is the difference between issuer pay model and subscriber pay model?
Okay, I think that I have already explained. Again, I'll explain. In issuer pay model, company will come to you for the rating. They come to you, they will submit their documents, their sustainability report, their BRSR report, and they request you as a ERP that please rate us on a sustainability index. So you get a request from company. In subscriber pay model, you Suomoto is starting, getting data from a public domain and rating those companies on their sustainability data. So that's the difference.
Okay. And whether one can use ESG credit rating by CRISIL on a subscriber pay model in their annual report?
Yes, they can use, because that is available on the public domain. If those, that rating is good and they wanted to use that, so that you can always use. There is no harm to use, because it is a publicly available data. So
Understood.
that is not an issue.
Okay.
And if you wanted to have a detailed report, because in subscriber pay model, you will not get a detailed report. So for just that detailed report, you need to pay some amount to them. Then you will get a complete report, and that complete report also you can use wherever you wanted to use an annual report.
Understood. Thank you for that. And maybe we can continue with the session, and towards the end we can take some more questions.
Okay, fine. So a few more case studies if we see. So Infosys, I think one of the prominent example on a service industry. So they again have a very good positive ESG credit rating, and not only from a India side, also from a global side, because MSCI has given them a double A rating, inclusion in the Dow Jones Sustainability Index. Their climate neutrality since 2020, renewable energy investment, their transparent disclosures have contributed to their sustained foreign investor interest. So because of their strong ESG profile, their enforcement to the positioning in the trusted IT partners with a strong ESG consideration, it is giving them always a positive impact on their vendor selection. It is giving them always a positive side. They are always on top of that whenever it's come to the as a trusted partner. When I talk about the Tata Steel, so why the Tata Steel example is important for all of us here? As I mentioned, Europe has their own set of standard. Europe has their own reporting framework. So CBAM is something which is impacting a lot all over the globe. So CBAM is right now applicable on 6 industries, which includes your steel as well. So steels, fertilizers, your cement, and 3 more industries are there. So steel is one of them. Tata Steel, because of the positive ESG rating, improved ESG scores, attracted the concise investors and aligned with the global decarbonization goals. And when I say they are committed to their net zero by 2045. So most of the big companies, most of the listed companies, you will find there is specific target of net zero by specific year. So it will be either, ONGC has their certain, specific target. I'm not able to recall that, but somewhere it is around, I think, 2038 or maybe 2040. Exactly, I cannot, I'm not able to recall that. As similarly, Tata Steel has their net zero target by 2045. So, because of their good ESG strategy and good ESG practices, they have attracted the long term ESG funds. They have improved the international competitiveness, particularly in European market. The market where most of the steel companies are right now struggling to enter because of the CBAM compliances. In that market, Tata Steel is able to sustain them, and that is the power of good ESG credit rating. So that's how you can sustain in the market. ITC Limited. So I think that was already requested by one of the participant. So it has a mixed kind of you can say impact. It's not kind of a positive or a negative. So ITC has a strong performance in environmental and governance part, which is overshadowed by the exclusion due to tobacco. So ITC was always considered that they are, always producing the sin products because of the tobacco, and they are not in a good practices. It is not good for the social aspect. But if I talk about in ESG, they are not somewhere working of the social part, S part, but they are always working on the environmental part and the governance aspect. So, if I talk about ITC has always been long been in the carbon, water, and the solid waste recycling practices, which was positive for them, earning high ESG rating by AA of MSCI. However, because of their tobacco business, because of they were in a kind of, we call it as a sin product, it was always excluded by the Indian ESG index, like Nifty 100 ESG or BSC 100 ESG. This was kind of an exclusion because investor participation, particularly from the global ESG fund. Over the time, how they work with the strategy, they diversified their diversification into FMCG, hospitality segment, and coupled with the sustainable ESG efforts, they help to reduce the stigma, and gradually they attracted back value focused on the investors. So now somewhere they are able to make them understand that it's not all about they are in that kind of the practices. Somewhere they are able to sustain in the ESG because of the ESG, and they are able to get funds, and they are right now trying to make their stand strong in the Nifty 100 and BSC 100 part. So sooner or later, which is somewhere I am expecting that we'll be able to see them in a list as well. And last example from my side is the Hindustan Unilever Limited. So again, the positive because of their strong profile, which enhanced their valuation and the investor preference. Consistently, they are scoring very high on an ESG parameters because of their leadership in sustainable sourcing, plastic waste management, water conservations, and social inclusion programs. When you see their BRSR report, they present their BRSR report very articulately. Present like as a storytelling, high ESG rating, always ensure steady inclusion of their ESG index. They able to attract the foreign investments, ESG funds, and maintain premium valuation related to the their peers. So, if as a company you want to be ESG rating ready, what preparation you should have? So, as a large listed company, not exactly all the top 1,000 listed companies are having right now ESG ratings. So, first of all, BRSR reporting you already have, but the problem is those BRSR reports are not prepared properly. you need to be very careful when you are drafting your BRSR comprehensive report. Try to understand each and every question properly, understand from the guidance note, understand from the sectorial guide which is available on the NSC, and make it proper so that when these ERPs are taking those comprehensive reports from public portal, when you are submitting to them, they are able to get a right response as a company from your side and rate you properly rather than giving you any vague rating. So that you need to be very clear. And if somewhere you wanted to have more independent rating or more rating where people can trust you more, so then in that case you should go for the BRSR core assurance or maybe the limited assurance, so that any third party can come, review your data and provide you a assurance report. As a company, you should have an ESG governance structure. So, board, committee, chief sustainability officer. Many of the listed companies, still many of the listed companies are not having a chief sustainability officer. Board is also not there. Committee is also not there. When I say board ESG committee, the specific ESG committee is not there, who is having a regular quarterly meetings, what is happening on the ESG side, what are the challenges, what are the risks, what are the opportunities. That is not happening. So if that is not happening, how you will able to understand and how the person or company will rate you. Comprehensive data system on GHG emission, energy, safety, DEI matrix. So those diversity, equity, and inclusion that you need to understand. Benchmark with GRI, SASB, TCFD with BRSR report. Try to have your report with a global reporting frameworks, SSB or TCFD. Because if you want to have your comparison with the MNCs, with other global companies, so somewhere you should have your sustainability report on a global reporting frameworks as well. So these are the few examples which I just given you. Like Infosys, Tata Steel have a strong ESG data assurance. If globally you want to go, so large companies need to align with EU CSRD, IISB standards, science-based target plus assurance of the sustainability metrics. So that is something you need to somewhere plan around. And active engagement with MSCI, Sustainalytica, S&P for the verified data exchange. So Unilever is something which always been having a global rating. So that's how you can plan for the global rating. For mid-size listed company, so somewhere if you are not coming in a top 1,000 listed company, you can plan for ESG readiness assessment to identify gaps, voluntarily BRSR adoption for credibility. Understand you are not coming in top 1,000, but voluntarily adoption is always welcome. So that is something you can go for. Prioritize sector material issue. So pollution for manufacturing, data privacy for IT. These are something which somewhere you need to opt and you need to prepare yourself. Build phase ESG data collection system. So this somewhere you need to plan around. Globally, if you want to go for the ESG ratings, so use simplified SME frameworks like UK streamlined carbon reporting system is there, ISO 14001 is there that you can go for. Adopt GRI reference report on carbon disclosure projects, so CDP you can go for. And these are the few examples which I just given for the reference purpose. As an unlisted company, so right now there is no SEBI mandate, but as an investor, they can ask for banks, as I mentioned, they will ask, and supply chain will demand for the ESG. Voluntary adoption of MCA, NGRBC guideline can be there. So you need to prepare the ESG statement, which can be cover waste, labor, anti-corruption, ESG readiness critical for future IPO and bond issue. Somewhere, if you want to go for the future IPO, you want to go for the public issue or the bond issue. So this is something you need to think. For example, if you are in a NBFC, or maybe if you are in any particular sector which is more focused on the social part. So ESG, you cannot deny that it is not applicable on us. You cannot survive without ESG application. So this you need to think upon. Globally, if you want to go, so driven by supply chain ESG application, so EU due diligence. So like for startups, we do the financial due diligence. Similarly, the ESG due diligence can also be a there. Adoption of eco-wages, GRI Light, ISO standard, ESG linked loan by the bank for the unlisted firms. So there are certain examples also for your reference purpose. So just if I want to conclude here, uh, market is now somewhere responding to the ESG rating. It's not like they are not somewhere responding. It is important for us. Credit rating now, it's not new thing which is we are not understand that why it is important, how it is going to impact us, and how we should prepare us. BRSR was something where which was preparing ourselves. Now we have prepared the same. We need to be mature enough to how to implement that, and we should be ready enough for the ESG credit rating. Strategic lesson for the corporate. So these are the 8 steps which you can incorporate ESG into your business strategy so that you can have a good ESG credit rating. So first is you need to understand the ESG principles so that once you have a clear understanding what are the ESG principles, then only you will be able to assess your current ESG status, where exactly I am, stand. Then you can set a clear ESG goals. What exactly I need to achieve? What are my targets? What are my goals? Based on that, you can develop a specific ESG action plan. Okay, this is my action plan with a specific timeline. This is how what I want to achieve in a near future. Then you will implement the ESG practices based on that particular plan, that these are the ESG practices I need to implement within my organization. When I'm implementing, there will be certain things which simultaneously will happen, so that you need to take care. You also monitor and measure the ESG performance. So once you have implemented, so regularly you need to monitor and measure the ESG performance, whether everything is happening as we thought upon, or as we develop the action plan or not. Is there any issue the team is facing? Is there any uh, constraint which I need to work upon? Then we also need to work upon on the reporting aspect. We need to communicate the ESG efforts, because ultimately rating will work upon on the reporting part. Whatever you report, rating will be done on that basis. So your communication will be very effective. Your reporting will be, your reporting should be very effective. If your communication or reporting is not effective, then again it is going to impact on your rating. And continuous improvement and adaptation. So similar, generally, we have in a business strategy, the ESG will also be a part of the business strategy. So this was from my side on ESG credit ratings and how we can implement and what is the importance. Now we can take a final set of questions.
Yeah, sure. So the next question is, uh, uh, so SEBI has mandated transparency in ESG rating provider methodologies. As professionals, how can CAs help clients interpret these ratings for investor communications?
So, as I mentioned, if you go on any of the website of these ERPs, they have already mentioned about what methodologies they are, following, what criteria they are following, what are the rationale they are, giving for the specific credit grading system. Everything is mentioned here. Somewhere, as a company or as a user, if you find that this is something I'm not considering as a right, or maybe if you have certain reservation up for that particular part, you can have interaction with them. So they will respond you as a company. For sure, they will respond you as soon as possible. As an investor or as a maybe other stakeholder, maybe they can take time, but they will respond you. So everything is available. If just you allow me, everything is available on their website. They have a specific tabs which they need to give, present given on their website. So their website is similar to like the exchange website.
Okay. And in case of sector specific ESG challenges, so something like, say, pollution for manufacturing, data piracy for information technology sectors, how should a CA help management identify material ESG issues?
Pardon me, can you again repeat the question?
Sure. So, in case of sector specific ESG challenges, like, say, pollution for manufacturing industry and data piracy for IT industry, how should a CA help the management to identify material ESG issues?
So this is actually, initial tasks. Generally, we can always help the business or the management whenever any, business is coming to you for their ESG assessment and for their reporting aspect. Our always first task is to have a materiality assessment. And when I'm saying the materiality assessment, we do here materiality as a double materiality, which includes my financial as well as impact materiality. And when I'm doing those double materiality assessment, I also need to understand the industry aspect. For manufacturing, I need to understand that my environmental impact will be always more because it is going to impact the climate, it is going to impact the nature, it is going to impact my resource utilization based on the industry which I am working upon. If I am talking about any of the service industry, for say example IT or a bank or maybe any other industry, in that scenario it will be a social aspect. In case of bank, again the dual impact can be there. For example, social aspect is there, but also I need to see whom I am financing. So for example, if I am financing to the industry, I am an indirect part of that emission. So that also, in that case, my scope 3 will be more because I am financing the emission. So it is not being considered as a carbon emission, it will be considered as a financed emission. Similarly for the insurance company. So for the insurance company whom I am, providing the insurance product. So in that case, if I am insuring those companies who are again a part of carbon emission, I am insuring the emission. So it is being called as a insuring emission. How much emission I am ensuring. So that is again part of my scope 3. So the terminology is huge in this ESG sector. As and when you are working with those clients, gradually you will upgrade yourself. And I would suggest whatever industry you think you have, more comfort or you have more experience, start with that particular industry. Because in that scenario, you will be able to guide them more properly rather than because if I go on an automobile industry, probably I will not be able to guide them because in that industry I don't have a much exposure in a previous audit assignment or maybe any other assignment. But yes, in a banking sector or an insurance sector or maybe textile or maybe any other, on those sectors I have more experience, so I can guide them in a proper manner that this is how ESG is impacting you.
Understood. So maybe, I'll take up next two questions quickly, and, in the interest of time, I'll just take up them fast. So what are the key risk areas that the auditors should focus on while providing assurance on the ESG metrics, and whether the ESG ratings can lead to going concern risks as well?
So first question is, I think, with respect to the audit part, it's not about the
Yeah.
rating.
Yeah,
So
yeah.
that it again depends on the business you are, you are auditing, what kind of the attributes which are more important in that industry or a company. So based on that, you need to find out with what are the risky areas where you can more need to be focused, and accordingly you can plan your audit. So without understanding which particular industry the this question is being asking, or maybe which particular area asking, maybe I will not be able to answer that. Just you need to see the industry, the area. Accordingly, we need to plan out which what is the risky attribute for me. Accordingly, those attributes I'll give my more time. Other attributes I'll give my less time, and accordingly I can plan out my audit. Second question was regarding ERP.
And second question was regarding, so, say for example, if there are poor ratings, can the going concern be impacted, or are there any other red flags that can be, highlighted?
I don't think so. It is somewhere can impact the going concern, because for going concern there are certain other parameters also which we need to see, because it can impact my further orders, I can say, but it doesn't mean that my business going to be stopped. It can be reduced over the period of time, but till the time it is not being negative, I cannot comment upon that my going concern is being impacted. So it will be, very, kind of a very early comment that it is impacting my going concern. So, and again, it is a non-financial parameter. So I should not, it will be very early comment on commenting on a financial parameter based on the non-financial aspect.
Okay. Thanks
But
for that.
if somewhere I have any base with respect to any government announcement or something like that, based on which the ESG credit rating is very negative, then somewhere auditor can take a call with respect to the going concern. Again, the case we need to understand.
Right. So it may depend on case to case basis about how and what impact does it, provide. Okay. So thanks a lot, CA Harsha Ramnani, and I think uh, I'm heartily providing a very well deserved vote of thanks. So on behalf of the Sustainability Reporting Standards Board of the Institute of Chartered Accountants of India, I extend my sincere gratitude to each of you for joining us today for the enlightening webinar on ESG ratings and BRSR reporting, aligning sustainability disclosure with investor expectations. Your participation has been instrumental in making today's session a success. A heartfelt thanks to our esteemed speaker, CA Harsha Ramnani, and for sharing her deep expertise and practical perspectives on ESG ratings and BRSR disclosures. Her presentation has helped us better understand not just the frameworks, methodologies behind the ESG ratings, but also the challenges and opportunities businesses face in aligning sustainability disclosures with that investors are really looking for. The Indian case examples discussed today have uh, given us concrete insights into how transparent and reliable reporting can strengthen market confidence. The discussions this afternoon reinforce the fact that ESG and BRSR reporting are not just compliance requirements, they are key enablers of trust, accountability, and long term value creation. It's clear that the road ahead will demand collective effort from corporates, investors, policymakers, and professionals alike to ensure disclosures truly reflect sustainable business practices. With this, we invite all participants to join us for our upcoming webinar scheduled for Thursday from 4 p.m. to 6 p.m., where we will continue exploring critical topics in sustainability reporting and practices. Once again, thank you for your active engagement and thoughtful contributions. Your dedication to advancing sustainable practices is invaluable, and we look forward to your continued involvement in our ongoing initiatives as we collectively pave way for a more sustainable and resilient future. Thank you, everyone. Over to you, tech team.
Thank you so much.
Thank you so much, ma'am. Tech support, please go.
Thank you.